Welcome to Simplified Profits with over 23 years of experience in the stock market. I'm Anthony Calhoun. Just make sure you subscribe, turn on notifications, and leave some feedback. We're going to go over some real quick, simple market thoughts, ladies and gentlemen, because we love to keep it simple. We grind on the slow, I want to say slow path, a lot quicker than most, but we're not here to try to get rich overnight. But the market is looking crazy strong. I mean, it is hitting all time highs, and it almost got me with the fear of missing out. FOMO. Today we actually jumped in when I seen this gap up in the morning. We entered Quad X, which is a forward leverage version of SPY. Keep in mind this is the hourly chart, and I had to slap myself around a little bit and say, just stop it. Once I started calculating the risk versus reward, and that's one thing you always got to calculate your risk versus your reward, because when I look at this, I mean, this is what we swing. We swing oversold, close to oversold, bottom of the Bollinger Band pullbacks. All right, most of them take, let's see, right there, 1.2 months. That one took 2.5 months. And right now we are at, this is an SPY 1.2 months. This thing could run up another month, which would be crazy with the things going on, and it's already hitting all-time highs. But we've already made our swings in SPY on Quad X and SOXL last month. Exited when it started looking weak, and we left some money on the table, but it is what it is. But we got out of Quad X almost within an hour. Very small profit. I'm just considering it a wash. This is the daily chart now, but semiconductor ETF is looking strong. Like I said, we entered here when it was oversold, and it got weak right here. The market being close to all-time highs looked like it was going to set a double top there, and it was overbought. So we like swinging from oversold to overbought on leveraged ETFs and do very well. Look at all the swings available every month. I think SOXL was going about every month and a half. And right now we're waiting for the next one. It could be a couple weeks. It could be a month. And doing the transparent account has got me more impatient than I've want to say ever been, because I'm trying to put money to work. But I'm going to sit back, relax, be patient, and just focus on my rules. There's some stocks I was wanting to get into, this being one of them for cybersecurity. Should have bought this for the long term down here, but I didn't. I'm going to have to start, as the account grows, we'll start adding some more long term positions. Right now, cash flow, you want to have cash flow. Cash is not trash when you're waiting on opportunities, okay? Cash is king. You need to have cash, like Warren Buffett sitting on a ton. A lot of people sitting on cash waiting for opportunities in times like this. So right now, the market, if you're in it, grind it out until you see a reason to get out. But this is one of those markets that could drop like a rock overnight if another war breaks out or China attacks Taiwan or something. Usually the news will hit to make the market swing. Okay. Usually good news happens when it's oversold to make it rally, and bad news happens when it just, the chart tells you prior to news. After 23 years of doing this, I don't listen to news. I block out the noise. I just read the charts. Right now, this chart is strong, which is where we sell at. So right now we're sitting on cash, small position in DIV. We added a little bit today. This is just for income. Usually we would have never held it under the 200-day moving average, and we would have never bought it looking at what looked like a double top after it just crossed over the 200-day moving average. But this is something that pays about 7% yield. They hold some decent dividend stocks in a majority of sectors, from real estate to healthcare. It's actually not bad for something that pays you monthly. Now, here, their performance, when you look at their 10-year performance compared to other ETFs, yeah, it's not a performance-based ETF. It's something that if you want to stack income, here, if you had $1 million in this, you're going to make $70,000 a year just dropped in your account in dividends. getting paid monthly. Okay, so we're going to dollar cost average a position on this on pullbacks, on oversold position, and just see how we end up. Very small amount, but back to the market. It it looks strong. It's even up after hours. This is post. No, that's regular hours. Let's include post market. Yeah, see how that candle just grew. So SMH weekly is up 3.6%. 13% for the year so far. Keep that in mind because it did 70% last year. Semiconductors ripped up 70% last year. It's already up 13% for the year, and it's just February. Triple Q's up about 6% for the year. Our account's up about 7% for the year. So market's starting to catch up to us, but we still plan on cranking out another 8% in February, hopefully, considering it's going to be a short month and we ain't seen a pullback. But I feel like we will. And even if we don't, let's say it pulls back in March and we get a 30% run up. So I'm looking at the average. Okay. It is what it is. SPY is up 5% for the year, did 20% last year. Q's did 50% last year. Dow Jones only did 10. Now Dow Jones, the hourly chart is looking the weakest. So that may be our first pullback. Everything else looks like it's breaking out. All right. But the Dow, it looks, even though the gap ups and gap downs usually carry some momentum, as you can see here. And just go back through charts and look at them. But sometimes they fade after a couple of days and drop. So right now, market looks strong. We're still sitting cash, trying to be patient. The fear of missing out can make you jump in the market at the top and just kind of crush any profits you've had or really anything you had. So let's say SPY runs another 4%. I'd be in quad X. It's a 4 leveraged ETF. 4 times 4, it's another 16%. So that would be, I'd hate to miss out on another 16%. But at this height in the market, it wouldn't be 16% of my entire portfolio because I wouldn't go all the way in. You have to keep cash on hand to manage the position. So I wouldn't be missing out on much, maybe 1% or 2 in my account, maybe 3 or 4%, but it's not worth the possible downside because we could easily see a pullback to the oversold position to this area. Let's say something happened or the market just decided to turn around and everybody rushed out the door. Maybe the 50-day moving average, it drops 5%. Then you're down 20% instead of up 16. Sticking to my rules kind of sucks watching it, especially when you have already locked in profit in those swings. You should have let ride, but hey, I'm sticking to a strategy. I know my strategy works well. I'm not stressing it, but it always is nice to ride the market out. That's why over the long term, we'll have more long-term positions that'll ride up when the market rides up. We had a few that we got out of just because the volume I didn't like. But probably next time what I'll do when I enter quad X, let's say we get a 20-30% swing, which we entered it right here. We've been up 20%. SOXL, we entered, excuse me, we entered back here. We were up as much as 50%, would be up still 40%. So probably what I'll do next time is the profit I get from those trades, I will either leave them in the leverage version or just take the profit out and move it over to the just a single version. Or actually when I buy the dip with the leverage version, I might buy a little bit, just single shares, just to kind of, not single shares, but single ETF, just to let it ride when I lock in profit from the leverage version. But other than that, I'm out. Market looks strong, so strong. I wish I was in it, but I'm not going to let that get to me because I've done that before. Trust me, it's an emotion that can definitely get you caught up at the high of a market. I mean, right here, I'm sure people were buying the melt up, which they still be good today, right? But that's what we're trying to swing is the pullbacks and the leverage ETFs. And sometimes that trades sideways like this. So you don't always get it straight up. And what goes up must come down. Um, and that is it, ladies and gentlemen. Hope you're making money in this market. If not, be patient. Opportunities come. There's a few I was thinking about entering. I was going to enter CBOE today. It's bullish, pulled back to the oversold position. But even if it ran up to the previous high, I'm looking at 2.5%. Not really a big trade. I'm going to wait it out and be patient and just wait for the opportunity. Have a good one.